Hello everyone. Wanted to review briefly what we've learned so far about financial statements and the communication of financial information using those financial statements. Now, it may not seem that we know very much yet, but looking at some real financial statements from Apple Incorporated, I think you'd be surprised how much we can tell even at this early stage about the company based on what we've already learned and what we know about these financial statements and such. So this is kind of a review, and you can do this with any financial statements you can find. These were found simply by going to the Apple website, looking for investor relations, and then looking for the SEC filing. This is a PDF version of the financial statements that they filed on an annual basis, the most recent ones. So first of all, we're going to start with the income statement. They call it the consolidated statement of operations. That's just a fancy way of saying income statement. I want you to notice a couple things, get used to when you look at any financial information. You want to know what dollar amounts you're talking about. This is in millions, so all of the numbers here should have, if they had put all the zeros on, 6 zeros to the right. So we already know something about Apple, that basically anything less than $1 million is immaterial. We discussed a little bit about the principles of accounting, general principles. One of them is materiality. If they round to the nearest millions, that's pretty much telling you that anything less than that is not meaningful for our decision making. So that's the first thing we can tell. We also want to make sure we understand what time period we're dealing with. Remember, an income statement has a starting and ending. Typically, you're going to see more than one income statement side by side. And that's important so we can kind of make some comparisons, because one of the things about information, financial information, is that the FASB wants it to be comparable, meaning that we can use it as a compare one year to the next and one company to another company. So as we look at this, we see that the income statement is for 1 year ending on September 28, 2019. That means that the time period started the year previous on September 29th and went through September 28, 2019. The year before, it was from September 17 to 18, and this is from September 2016 to 2017. So those are our time periods. Because we want to know how timely the information is. So one of the things that we see is we have net sales or revenues first on income statements. We know that this is what Apple earned, and you can see that they earn in two ways: by selling products and selling services. So that's their way of earning revenues. Revenues are always first on the income statement. Then we know what the cost of those products is. So this is what it cost Apple to make the products they sold for this. So if we look at this, this is $144.9 billion is what it cost to make the products they sold for $213.8 billion. So we could actually do a quick calculation, subtract how much it costs, and tell ourselves or figure out what our gross profit, or what the difference between what an Apple sells their iPhone for on average and what it costs to make it. Now, this product cost includes making it and shipping it, getting it all the way ready to in our hands. Service is the same way. This is what it costs to pay the people to provide our services, and this is what they sold those services for. So their total gross margin, the difference between what they sold things for and what they bought it for or made it for, is $98 billion approximately, almost $100 billion. Now, that's a huge number, but something important. we can compare that to the year before. And as we see here, sales in total are down. Services are up, but the product sales are down from this year, the year before, to the other. That's why they show 3 years. So we had an increase in the first 2 years, but then a drop off. Now that would be significant to a shareholder or potential investor. That means that they had gross margin as well. However, they still spent more on operating expenses. And notice how broad their categories. They really only have 2 types of expenses: research and development. That's coming up with new products, and we want them to spend money on that because we want them to develop new, exciting new products. And selling, general, administrative, that's everything else. That's basically running the offices and advertising, all that kind of thing goes into that category. So after all of those are paid, they made about $64 billion. Notice it's down about $6 billion from the year before. This other, we'd have to look up some detail about what's included in other. It's probably some interest or some of that type of thing. And then, of course, the taxes. The only thing that we tend to put the taxes last because we have less control over that than the other expenses. And then our net income, which we've learned is revenues minus expenses. And that we see is also down. So up the 2 years before from the 1 year to the next, and then down again. So we already can identify trends in terms of revenues, in terms of profits. We can see what kind of gross profit they make, the difference between what they sold something for and what they paid for it. And we can see the comparison between the years and how Apple makes its money. That's just on the income statement or the statement of operations. So let's cruise down to the balance sheet, okay? And see what we can tell there. Now, balance sheet has current assets. Those that are going to be utilized can be used to pay bills in the next year. Non-current assets, those that are going to be bring benefit past 1 year. And we see the kinds of things. We don't have to understand all the terminology to know that these are the resources that Apple controls, this assets. That's what that means. If they put it on this balance sheet, as of September 28, 2019, they had control of $48.8 billion in cash and cash equivalents. They had another $51.7 billion in marketable securities, things that they could sell quickly. All right, we don't even need to know what that is, except to know that if it's a current asset, it's available to be used to pay bills in the next year. That's why it's in this category. Long-term assets include things like property, plant, and equipment. You can see how little, comparatively, still $37 billion they have in that kind of thing, compared to just the money in the bank, the cash and cash equivalents. And we can compare it to the year before. See how much it changed. We can see that actually total assets, the amount that they controlled, dropped. Not surprising, given that their revenue was off a little bit. Same thing with liabilities. We can see where they owed money. These are the things they owe in the next year. This is things they owe past 1 year. We can compare it to the year before. We do not, again, need to know all the details about what these are to understand that this is something that they owe to someone. But just while we're here, accounts payable is when we buy things on credit. When we buy materials and pay the person who sold it or the company that sold it to us later, then that is accounts payable. When we borrow money, that might be called term debt. It might be called commercial paper. All right, when we owe our employees money that we haven't paid them yet, that might be called other current liabilities. So all those kinds of things are here. And again, it's not critical, and I don't want us to get too worried about knowing all the details, but we do want to know that these are liabilities that we owe, we're going to end up paying. And so to the tune of about $248 billion that we owe to other folks. So the amount that is owned by the shareholders is down here under shareholder equity. You see retained earnings. And we can see that it changed. And what we know about retained earnings is if retained earnings went down, even though we had net income, that means we must have paid dividends, right? Because that's where dividends get paid out of, is retained earnings. And we see that common or capital stock went up. That means we must have sold additional shares to more people. So that total stockholders' equity went down. So we can have this, we know the comparison, we know things about what happened to Apple in terms of their liabilities. Notice how little it changed on the non-current liabilities. Almost identical from year to year. We can see that they paid a large amount in dividends. Those are all things. We would also see those dividends on the statement of shareholder equity, okay, in the retained earnings column, which is here, dividends declared, okay, or promised to the shareholders, was $14 billion, as we suspected. Now let's go down and check at the cash flow. Oh, before we move from the statement of stockholders' equity or shareholder equity, notice that retained earnings, the things that we've learned so far is we've learned that net income makes the retained earnings go up, and that dividends makes it go down. Those are the two items that we have seen so far. We're not going to worry about the other ones, not going to let them distract us, but they will have explanation those in later accounting classes. And then finally, the cash flows, just as it says in our textbook, operating activities, investing activities, financing activities. This is our day-to-day operating, so $69 billion, less than the year before. So there's the story, and we know that that would be kind of expected because sales were down and things like that, so they generated less cash from normal activities. All right, they generated cash from investing, which means they sold more investments than they bought. So they bought lots of new property, plant, and equipment, about $10 billion, but that's a small amount compared to some of the investments they sold. So actually, a positive cash flow from those, from investing. Notice there's 3 years we could compare. We could look what happened the year before, make a comparison. All kinds of information we can already tell. And for financing, remember this is debt or money to or from the shareholders. And you see that they sent a lot of money to the shareholders. They purchased common stock from the shareholders to the tune of almost $67 billion. A whole lot of dividends also. That was the number we already saw as well. It's also on the cash flow as a negative cash flow under financing. That's where dividends belong. We can tell how much that was. And any new borrowings. So here was a new loan. We borrowed in about $7 billion there. So that's the kinds of things you can already tell because you know what belongs where on the financial statements and what the definitions are. Even though you may not know every little detail, you know the definitions of assets, liabilities, revenues, and expenses, and you know where they're reported. That gives you a lot of insight into what is happening with the story behind Apple and its financial information.